Hello and welcome back to the Gaming News Canada show presented by GBG Plc. Yes, once again, I'm your host, Steve McAllister. When yours truly was a younger sports journalist in the 1980s and early 1990s, Toronto Star columnists Jim Proudfoot and Milt Dunnell were calm, soothing voices of reason around the Toronto sports scenes when fans and some of their peers lost their collective minds on events and incidents involving the Maple Leafs, Blue Jays, teams, leagues, players, etc., etc. These days, as a chronicler and podcast host of a regulated sports betting and gaming industry show, this seems, or at least the industry comes under fire on a daily basis. Not so sure about this podcast. But on this occasion, we sought a sane voice to help us slice through the noise and provide some measured, rational insight. So, without further ado, we welcome back to the Gaming News Canada show a co-founding partner of Acies Investments, partner emeritus at Eilers Krejcik Gaming, business of sports betting investor, founder, executive advisor, and a title or two I'm sure I've forgotten. Welcome back, Chris Grove.
Yeah, thanks, Steve. I'm sure there's a title or two I would have forgotten as well. So you're not alone on that front.
Yeah, and I guess in full disclosure, I should just mention too that Chris is an investor and the owners of this media outlet, the Parlay, and one of our earliest investors. And we haven't had you on in a while, but you were one of the go-to guys when I started covering this industry 4 years ago. So it's great to get you back before we turn the page on 2024.
Yeah, happy to be here. Happy to jump right into it.
Let's do that because there's an awful lot going on. I guess first, Chris, just in terms of you, of your own situation, like what's kind of on your plate these days? And I know you're usually juggling. Actually, isn't one plate. You're usually juggling several plates. But what's top of mind for you right now?
We're obviously laser focused on the private early stage ecosystem for gaming and gambling. As you know, Acies and also Eilers and Krejcik Ventures have investments in a number of entities and categories, some on the direct-to-consumer side, some on the B2B side. So we're keenly aware of how that landscape is shifting, and also keenly aware of how some of the macro trends I know we're going to discuss in the industry at large are creating a mix of opportunities and challenges for younger companies in the space. So that's what's taking up the majority of my time these days.
Hey, Chris, it's been a really tumultuous year, not only in the U.S. but here in Canada as well. I mean, obviously political unrest. You're just going through, just finished an election, and you're going to have a new / old president in early in the new year. In Canada here, we saw the interest rates come down again today from the Bank of Canada. Just given your experience on the M&A side and as a venture capitalist, like what is that climate like these days? And are you optimistic or pessimistic as we head into 2025?
I think optimistic. I think you saw a lot of templates established and track laid for M&A in 2024. Obviously, some big deals from folks like DraftKings, along with a handful of smaller deals. So you look at let's take DraftKings as a lens for appreciating what the broader industry might be interested in. Although you saw echoes of this at Sportradar and FanDuel as well. There's obviously large M&A on the table in terms of direct-to-consumer brands or the larger consolidated suppliers asking themselves, how can we get bigger in one fell swoop, right? Or how can we really shore up an area where we're maybe not as strong as we'd like to be? And that's why you do hear folks like Rush Street consistently mentioned as a possible acquisition on the direct-to-consumer side. I think suppliers, as operators continue to get consolidated, suppliers are looking over their shoulders and saying, okay, we need to get bigger in lockstep with the growth of our ultimate end customers on the operator side, because if we're not keeping pace there, if we're not consolidating, if we're not able to sell more products into them, we risk erosion of pricing power or ceding pricing power to operators. So I think you'll continue to see some of that consolidation at the top end, and for operators it'll be driven by where can we get additional brand strength, or what adjacent product categories do we want to get stronger in or just enter entirely, which is why you hear people talk about maybe fantasy sports focused or sweeps focused acquisitions. On the supplier side, it's how can we get bigger and how can we add more options, more items to the sales menu for our operator partners. But then if you go down to the lower end, the smaller end of the M&A spectrum, you just see a lot of operators asking themselves, as you saw FanDuel with Beyond and DraftKings with Simple Bet, what can we do to differentiate on product, or what can we do to claw back margins? So more of the bolt-on acquisitions, I think, are going to be that kind of flavor of we'd like to in-house part of product, or we'd like to get better at a specific part of pricing or product development, or we see an opportunity somewhere in our stack to claw back a couple hundred bips of operating margins. I think those are going to be the themes that dominate M&A on the smaller end.
Hey, Chris, and just quickly, if you're a startup looking to raise some money right now, what's the environment like for that moving into the new year?
Really depends on where you're sitting in the ecosystem. We've all seen the headlines recently of some of the .com crypto operators having tremendous success raising money. And obviously there's a lot of enthusiasm for that category. There's also a lot of capital floating around in that corner of the world. And so that's what you're always looking for as a startup. What you're selling and what you're hoping others will be buying is largely a story at that stage. Obviously you can have things that supplement that story. Maybe you've got some early KPIs, some early customers, you've got a great team, but really when you boil it down, you're selling a story. And so you're looking for enthusiasm and the ability to act on that enthusiasm. Maybe the other side of that spectrum, where you probably see some of the lowest levels of enthusiasm and actionability. Let's imagine you're a startup that wants to, from whole cloth, right, take on the regulated US online sports betting opportunity. There, I think you'd find less enthusiasm and also just less natural pockets of capital. So there's no one size fits all answer, but I would say some of the areas where we're seeing a lot of enthusiasm do include .com crypto, right? Just because of the growth there, and the sense that there's a generational shift among consumers in terms of where they want to play, the brands they're embracing, the currencies they want to use, and the kinds of games that they want to play. In the middle, I think, are things like game studios, reg tech. These are areas where we do see some enthusiasm, but you've got to have your story dialed in, and you have to have some kind of unfair advantage baked into that story. And then I think where we see the least interest is on the heavily regulated direct-to-consumer brand investments. Doesn't mean there's no interest, but just in terms of where you finding that optimal or greatest confluence of enthusiasm and ability to fund, it definitely sits at its low point when you're talking about that kind of opportunity.
I introduced you as that sane voice of reason at the start of the podcast, and
yeah, we'll see. We'll put that one to the test here over the next 20 or so minutes.
Well, I really wanted to get you on here because there is so much happening in the regulated industry right now. News came out this morning that there's going to be a congressional hearing into the legalized sports betting industry next Tuesday, December 17th. I believe it's Dick Durbin is chairing that hearing. We it seems every day we read something new about problem gambling. Sports betting advertising continues to be a hot button issue up here. You mentioned sweepstakes a few minutes ago. There's been the last 6 months, it seems there's been a lot of conversation around daily fantasy sports and sweepstakes and kind of the bun fight. And I know you'll want to get into that. Taxation, just before we got hopped on into the studio, or I saw where there's rumblings around Michigan now that they might increase their tax rate on legal operators there. Robinhood, we had Steven Saltz, the CEO of Rivalry, on this week and talked a bit about Robinhood and where their plans may lie within sports betting. Just, given you're a guy that you've been around for a long time around this industry, Chris, like what is the temperature right now, and what are your feelings with what we're seeing across the industry in the U.S.?
Yeah, only about 20 or so topics wrapped up in that question. Yeah. So let me do my best to parse, and we can go deeper on any individual one that you think merits the follow-up. Let's start with the question of the Senate hearings and use that as a proxy for discussing the vectors of risk that exists from the federal government for the regulated online gambling industry in the U.S. I'm not so sure that there's anything material that's going to come out of the Senate hearings per se, much in the same way that I don't know that there's anything material that's going to come out of the letter to the FTC regarding DraftKings and FanDuel and alleged anti-competitive behavior. But I think what you always have to keep in mind when you see that level of activity is that it does mean the topic is in the air in DC, right? Same with the Safe Bet Act. It means it's in the air. And so it means it's gone from 0 to 1, which is a critical threshold to cross. Now, that is not at all the same thing as saying that it's going to move from 1 to whatever number you think imminent action represents. Let's say 10. There's still a lot of numbers in between 1 and 10, but that is a critical one to cross when your topic is in the air. You just have an elevated level of risk. To put some context around that risk, this is obviously an outgoing chair on a committee that's holding this hearing in the waning days of a lame duck session. Same with the FTC letter. I continue to remain very bearish on the idea that there will be any kind of material federal legislation. It feels difficult to get bipartisan support for that and for that to be a priority. So in terms of safe bet, I think that's more likely to remain something that sits in the theory rather than the practice, the sizzle rather than the steak column. So again, I don't know that I see any imminent threat that should cause people to rethink their plans or adjust their outlook, but I think it is important just to realize that some threshold has been crossed in terms of we do have these various vectors, conversation at the committee level, conversation at the FTC level, although again, you have an outgoing chair there, right? And a letter issued during the lame duck, and conversation at the legislative level. None seem individually to be a material threat or to have a high probability of action resulting from them, but they all still do represent an undeniable fact, which is this topic is on the radar of federal legislators. I do believe that the incoming administration is less likely on balance to do anything about any of these topics than the outgoing administration. So I think that's another reason why you can downgrade the risk. Two other things I want to address quickly on the federal level, and then we can jump to some of the other topics that you neatly bundled there in the one question. I think the other two federal vectors that people should have front of mind, or at least middle of mind, one is the CFTC. So thinking about what could possibly happen for the prediction market category, and you mentioned Robinhood earlier, it's likely under the auspices of CFTC regulation that Robinhood would enter sports betting, require an expansion of what the CFTC allows as an event. So how probable is that? What kind of change are we or are we not expecting at the CFTC? And if we are getting change, who's incoming and what kind of mandate do they have? I think it is worth noting on the prediction market front, Trump administration likely to be a big fan of Polymarket, one of the largest cheerleaders, one of the earlier forces really presaging a Trump victory. And so I think that probably earned them a lot of credit with the incoming administration. And then just prediction markets in general are, I think, one of the new media pillars for folks like Elon Musk and David Sachs. There's almost an orthodoxy there about the value of prediction markets in terms of a way to get at the truth. And as a counterpoint to some of the shortcomings that they like to point out with the mainstream media. So you do have a lot of forces in the administration and surrounding the administration that are likely to be very bullish on prediction markets and are likely to want to carve a path. That ends up being a point of exposure for the regulated sports betting industry, largely because it could just usher in a new wave of competition. I don't want to say overnight, but something pretty close to overnight. And that competition would be 50 state, including California, Texas, Florida, New York. It would not be subject to the same gaming tax that DraftKings and FanDuel currently pay. So there's an asymmetry there. It's not just that a new wave of deep-pocketed, strong brand competition could come in overnight. It's that they also would enjoy some advantages over the incumbent OSBs. We can dig into the particulars here. It's not all threat, in so much that CFTC mitigated product is unlikely to be anywhere near as good as 365 or FanDuel or DraftKings. So there's checks and balances. There's pros and cons here. The other federal vector that I think is not discussed nearly as often as it ought to be And it's a long tail risk. So I get why it isn't discussed that often. You have to remember in the US, regulated online gambling at the state level still rests largely on the back of the OLC opinion regarding the Wire Act. And we did see efforts by Trump the first time around to revisit that opinion. And you have to ask, I think, and it's a legitimate question to ask, is Miriam Edelson interested in motivating the Trump administration to take another pass at the OLC opinion? Again, I'm not sitting here saying that everyone should be on DEFCON, whatever the highest DEFCON number is. But I think it's a topic worth discussing. And again, when you're talking about what are the vectors of risk, what are the vectors of exposure vis-a-vis the federal government, the US federal government, and regulated online gambling, you've got everything that's happening on the legislative side, maybe throw the FTC in there. You also then have the CFTC opening up a new avenue of competition. And then you've got the question of how wobbly is the OLC opinion, how much jeopardy exists around that Wire Act overlay. Again, I don't think any one is something that DraftKings needs to drop everything and focus on. But I do think we're at the, let's call it, most elevated level of federal risk and federal exposure that the category has been at since the PASPA decision.
Hey, Chris, I want to read a quote from a LinkedIn post that you published back, I think, in October. It was a lengthy post, but kind of this passage and kind of caught my eye, and it goes back to again that the sweepstakes daily fantasy conversation that's been happening for a while now, and just so quote, focusing on trying to beat up fantasy sports sites and social casinos does nothing but embolden opponents of online casino bills, grow their ranks, and allow the already powerful anti-gambling narrative to gather greater and greater steam. What should legalize operators? Where do they need to keep their eye on the ball, or what ball should they be keeping their eye on right now?
Historically, industry infighting has been something that opponents of the industry exploit, bottom line, right? And so any opportunity to limit or mitigate that industry infighting is usually to the benefit of the industry, especially if it's looking to defend itself against waves of criticism, and especially if it's at the same time looking to find expansion opportunities. So anytime the AGA is, for example, the American Gaming Association, is taking time, energy, and resources to attack fantasy sports sites or social sweepstakes sites, which, by the way, those are not initiatives that you even have unanimity among AGA members that these things should be priorities, right? But every hour, every bit of political capital, every drop of energy that goes into that is political capital, time, and energy and resources that is not going into defending the onslaught of criticism that the industry is receiving from all corners, right? From lawmakers, from the media, from academics. This is a torrent. And it makes sense. You talked, I think, earlier about the wave of opposition, of pushback that we're seeing. That's usually the math of these situations, that the intensity, the speed of expansion, it's a rubber band, right? It tends to snap back and be met by a similar or greater level of intensity of opposition. And in the US, the expansion of online sports betting, and to a lesser degree online casino, probably the single most accelerated expansion of regulated gambling that I've seen in my lifetime. Maybe you could even argue that's the single most in the history of the US. So what I mean when I talk about that infighting and the ability of critics to exploit it comes down largely to a waste of time, resources, and a lack of focus on presenting a coherent defense to what, again, is an onslaught of criticism that seems to be gaining momentum, not losing momentum. There's a second point that I want to make, though, because there's the criticism and then there's the minting new opposition. And this is where we move from the defending the industry over to the supporting expansion of the industry. When you take an online casino bill, and you've heard me talk about this ad nauseum, so I won't repeat myself too much, but this is already an uphill battle. in a nutshell. There's a reason why we're not seeing a material number of online casino bills get done, even though you have these amazing examples in New Jersey, thanks largely to the work of Director Rebuck and his team, and then states like Pennsylvania and Michigan. Amazing tax revenue for the state, no impact of any kind of degradation of the retail casino industry in those states as a result of the introduction of online, run in an incredibly tight and scandal-free manner, despite, again, the hawk-eyed attention paid by critics who would make hay out of any hint of scandal. So you've got these amazing examples, these templates of very successful online casino markets that have been going for, in New Jersey's case, over a decade at this point. You're still not seeing bills getting done, and that just speaks to how difficult it is for these bills to get done. So when you start attacking some of the fantasy sports sites, or you start putting things like in the nickel G's model legislation, you start putting an outright ban on sweepstakes and criminalizing sweepstakes, you are by definition just adding more people to the opposition side to these bills. I'll give you an example. Put even aside the fact that now fantasy sports companies or social sweeps companies would be inclined to try and defeat those bills, right? And that these are well-funded, profitable companies that can exercise some muscle. And again, it's not as if these bills are difficult to defeat. They're difficult to pass. They're easy to defeat. So any additional opposition, no bueno. But think about the sweepstakes for a second. If I am any of the blue chip Fortune 500 companies that run promotional marketing sweepstakes on a regular basis, that's your Walmart, that's your Starbucks, that's your AT&T, that's your Verizon, the list goes on and on. I have zero appetite for any additional risk or exposure to a state AG or a state gambling regulator. So the minute I see a bill like that Nickel G's model bill that says sweepstakes and gambling and fines and prison within the same paragraph, I don't care how carefully the language has been written. And honestly, the language in that model bill is not written that carefully. I don't care about any of that. I'm not going to parse it to that level. My appetite for risk is zero. And it is nothing for me. I'm already paying my lobbyists however many millions to work on however many other issues. It is nothing for me to tell them this bill, no good, right? So that's what I'm talking about when I talk about piling up opposition to expansion. On the question of defending the category, I have legitimate questions about, you take your eye off the ball, you dilute focus. Is this really the right time and place to be diluting that focus when the industry is more in need of defense than, again, it has been at any point during my lifetime? I'd say the answer is no. And then on the expansion question, why are you making a difficult task already more difficult? Sisyphus is already pushing the boulder up the hill. Why do you want to add a second boulder or make the boulder heavier? What are we doing here?
Hey, Chris, what, when we're in the Christmas season here. When you're at a party next couple of weeks and you're talking to people who aren't immersed in this industry and they start grumbling about gambling or they ask you about regulated gambling, what's the story that you're telling now, and has that story changed a whole lot from when, I guess, two places, from when you got into the industry, and then secondly, since PASPA was overturned in 2018?
Look, broadly, it's a very sensitive question because this is one of those industries that if someone has a moral objection to, I don't know that's really my right or my place to try and argue them off of that moral objection, right? This is a product that is not for everyone, and it's a product that specifically shouldn't be for everyone. I think it is, and I do have this conversation with folks from time to time. I think that it is singled out in a way that is perhaps a bit disproportionate to its uniqueness as a product of harm. When I think about some of the other areas of consumption, whether that's on, let's say, the food and beverage side, right, or the alcohol side, or credit cards and personal finance, there are a number of other areas where I think gambling bears a disproportionate brunt of the impact when it comes to criticism and assignment of social harms. The argument that I've always made, and I'm not unique in making this, is that gambling is a very human thing to do. right? I probably first thing humans invented was some kind of language. Second thing they invented was some kind of game. And then the third thing they invented was some way to gamble on on that game using the language that they had invented in step one. The U.S. Much of the early funding for the colonies came from lotteries. Right? This is something that's baked into who we are as people, and specifically in the U.S., who we are as a culture. You're not getting away from it. So you may not like the DraftKings ad or the idea that sports betting has been regulated here, or there, but you're kidding yourself if you think that in the absence of that DraftKings ad or in the absence of a state regulating online sports betting, that the activity and the harm would go away. All we're doing here is, and I think to the benefit of everyone, is making that what harm does exist more visible and more mitigatable. And again, if out of sight, out of mind provides you a comfort, that's great. But that's exactly what it is. The shift toward expanded regulation of gambling primarily brought to the surface and into the light what was already happening on a widespread basis in the US and in Canada as well.
You know, you talk about the lottery, Chris, and I've told the story here before. I mean, when I was a young hockey player in Eastern Ontario in the early 70s, it was then before OLG was OLG, but it was provincial lottery money that paid for new arenas back then. And I was fortunate enough, and my two brothers, that we played in a lot of new arenas from Ontario money back in the early 70s. So you're absolutely right about that. The other thing we've talked a lot about here lately too, Chris, is just the coverage of the industry by mainstream media. And you know, we've had Paul Burns on the podcast, and Amanda Brewer, and Dave Briggs and I did our kind of own Gaming News Canada roundtable on media coverage last week. I mean, you're someone who's got more than a passing interest in media. I mean, you founded Legal Sports Report back in the day before you sold it to Katina Media. Like, what are your thoughts? And again, I don't want to be a punching bag against mainstream media because, as I've often said, I've spent a big chunk of my professional career in that industry. But what are your thoughts with the way the traditional media has covered this industry? And I'm thinking there's probably, if you don't like it, the blame can be split a few ways.
Yeah. Look, I've interacted with hundreds of journalists in my career. Almost to the one, I found them to be intelligent, well-meaning people who increasingly are saddled with an unrealistic workload. You'll remember us being of somewhat similar ages. Used to be that there were multiple beats within business or within politics. Used to be there wasn't just a political reporter or a business reporter, or at some outlets now those sort of being one and the same. You used to have multiple state house reporters, right, that would each have their own individual beat within the state house. The consolidation of media in North America, won't speak to it globally, although I believe it's a global phenomenon as well, has put reporters in an increasingly untenable position where they are asked to cover more categories in depth than any human could reasonably cover in depth. So I'm pretty sympathetic on that front. And when I think about what the motivations are, what the intention is, when I think about the interactions I've had with journalists, by and large, is positive. And it's people who want to do a good job, want to understand, and in many cases are just not dealing with the sufficient resources to allow them to understand. The thing that I always try to do whenever I talk to a journalist is to work with them to identify the areas where they are least confident in their understanding of a topic, and make sure that I'm recommending subject matter experts who can help them to brush up on that part. And also that I'm being clear about whose affiliation is what, how you're going to need to balance these sources, just providing them with some additional context so that they don't have to do that work or that parsing themselves. So I think maybe what is not happened in concert, right? If we think about this increase in the workload of a typical journalist, what I don't know has necessarily increased in concert is our ability as an industry to offset that increased workload by providing like more and more comprehensive, but at the same time concise,
Right,
pieces of research, fact sheets. And again, the AGA, I think, does an increasingly good job on this. Joe Maloney at the AGA, I think, has really leveled up that organization in terms of the resources that they provide to journalists. So this is not a criticism of the AGA or ideas specifically, just more broadly as an industry. I don't think we've kept pace with the alarming overloading of journalists. I don't think we've recognized how that demands that we provide just a deeper and yet at the same time more concise library of resources, information, access to subject matter experts that can help to counterbalance their workload. That's the reality. You may not like it. You may not think that's how journalism should function, but that's what we've co-signed on as a culture. That's what we're willing to pay for journalism, and therefore what journalism gets in terms of resources. By and large, there are exceptions, and so we as an industry have to work within that reality. And I don't think we've quite caught up yet.
Yeah, and I would say it's the same story here in Canada. I think Paul Burns is a outstanding voice for the Canadian Gaming Association, but it's a very small organization, and he hasn't had, as we've said here repeatedly. Paul often seems to be a lone voice in Canada, and I think it would be good for the CGA and for the industry in Canada, for operators and suppliers and leaders in this industry to step up a little bit more when it comes to dealing with and educating the media.
Yep, I think that's right. There is also, look, there's a dynamic that occurs. Let's not name names. We'll just talk generically. So Let's say I'm in sports betting, right? And there are a couple of brands at the top, couple in the middle, and then a few who are at the lower end. There's just no alignment of incentives, because oftentimes the brands at the top just are not incentivized. They tend to be publicly traded or privately held and closely guarded. They're not incentivized to be out in front on these topics. It's more risk than reward. But then when you look down to the smaller operators and you talk to them about this, they'll say, well, that feels like that should be on the larger operators. I'm expecting them to lead the charge because they're the ones who are reaping the benefits of this category to the greatest degree. So I expect them to be out there defending it, which, by the way, is not to say that the leaders never do that. It's just that their incentives are not perfectly aligned for doing that to a maximalist degree. And then everyone else down the chain takes their cues from the leaders and says, well, I don't really see the benefit of, sticking my head up either, because that makes me a magnet for criticism. That makes me a magnet for spurious litigation, which we see more and more of, especially in the US. And so you do have this feeling of, well, someone else should do it. And then that does end up getting loaded disproportionately onto the trade group. But the trade group usually ends up being under-resourced and tasked with however many other issues. So you do have this dynamic where no one is fully or properly incentivized to lead the charge or to participate to, again, a maximalist degree. And as a result, you end up with a relatively small number of spokespeople who can only cover so much ground, and who, to your point, do end up seeming like a lone voice sometimes, which doesn't contribute to the public sense of who's winning the conversation or how the scales of support are balanced.
One more media question for you, and then your old company Katina had a round of layoffs recently, and journalists were most impacted by that, and we have seen a lot of journalists leave the industry this year, and I know the affiliate business is seems like is going through a shift in strategy right now. Just some quick thoughts on that, Chris.
So first thing I'll do is call out the reverse job board that Dustin Gowker has put together over at Closing Line. That's a great document. There's an incredible amount of talent there. And I think last I looked, there are 150 rows, something like that. And some people I've had the pleasure of working with, a lot of people that I haven't, but it's a Google sheet. You can access it at Closing Line Consulting. Maybe you can throw a link to it in the description for the show or in the newsletter, because there is a visibility gap, right? There is not necessarily a great resource connecting talent with opportunity, and there is still a lot of opportunity in this industry. So I think it's on all of us to highlight efforts like Dustin's that do attempt to provide some kind of bridge between folks who are looking for opportunities and organizations that are offering opportunities. I think we assume sometimes that process is more efficient and more comprehensive than it actually is. And in reality, it's still pretty diffused and pretty broken. When we started LSR and Online Poker Report, but before that, which no longer exists, the idea was that there was an opportunity to marry the affiliate model with quality reporting, trade journal reporting, the kind of thing that really only at the time Gambling Compliance, now Vixio, was doing, and EGR and IGB to a degree. And I won't claim that we were the only ones with that idea. Lots of people had it. It did open the door for folks who had more of a background in journalism as opposed to commercial writing and that kind of copywriting to participate in the affiliate space. I'm not as up to speed on what works or what doesn't in that particular corner of the world anymore. You've got an incredible amount of upheaval, right? A few things have happened. One, mainstream media has started covering these issues in a far more substantial way. That was the first chunk of our conversation of how much of a topic of interest regulated online gambling is for the US media. So that pulled some of the oxygen out of the room for the trades. I think there was also just an apex when, first when DraftKings and FanDuel were at their DFS heights. Second, when the PASPA decision came down and you had that rapid wave of expansion. Those were really apex points for how much there was to write about, how much interest there was. And I think that started to drop off as well. And then look, the front page of Google ain't what it used to be.
Right.
More ads, the carousel, now AI, more consumers maybe engaging with search in a different way, using things like Claude, or even using things like TikTok and social media platforms as a substitute for search. So the trade publication as affiliate play was really contingent on this underlying model of, we're going to commit to funding excellent reporting. We're going to get rewarded with strong positioning for our site within Google, and then we'll subsequently be rewarded with substantial traffic based on the strength of that positioning. The reality is those last two links in the chain are no longer certain as they used to be, as Google changes how it works and consumers change how they use Google and Bing, like just traditional search engines in general.
Right.
So I think it's a shame. I still think there is a space for and interest in that kind of quality reporting. I think there are a lot of stories that deserve to be told. You all do a great job of telling those stories. I think LSR still has moments where it does a great job of telling those stories. I think increasingly you're starting to see those stories move more toward newsletters like yours in that model. And what Dustin is doing with Closing Line, what Steve Ruddick is doing with Straight to the Point, what Scott Longley is doing with Earnings and More and Compliance and More. That feels like the new mode of discovery, or an emerging mode of discovery for news. Unfortunately, I don't know that mode corresponds as well with the affiliate monetization model as the traditional, organic search driven website does. So maybe someone can square that circle, or maybe, more folks will take the long view and just recognize the value of credible news as a brand building exercise, which should still matter for affiliates, at least affiliates with a longer view. If you have that longer investment horizon, I still think there are a lot of opportunities there, simply because there are stories that need to be told, and there are people who are capable of telling them, and there's an audience that's interested in reading them. I just don't think that we've reconfigured the way to make that feel appealing or sustainable from a revenue and a monetization perspective quite yet.
Yeah, I mean, it really is a dynamic beat, Chris. It's not unlike being the editor of a sports department where, you're covering baseball, football, basketball. I mean, betting, you're covering betting, gaming, compliance, tech. I mean, it's a really far-reaching industry. Hey, last question, and we're still awaiting regulated sports betting in Texas, California, and Florida. I mean, three awfully big states, and I know anybody who's an operator would love to be in any one of those free markets, if not all of them. Where any news on that front, or any, can you look into your magic ball and figure out when we might see that
Yeah,
happen?
what's the I forget the one on the Magic 8 Ball. Ask again later, I think, is the
Yes,
appropriate
yes.
response that the Magic 8 Ball would kick up. Look, Hard Rock has the Florida market, and while you've heard them suggest that they'd be open to striking a deal with FanDuel and DraftKings, whether or not those groups can all come to an economic alignment that makes sense for everyone involved, that feels like a tougher circle to square, right? And Texas, of the three in terms of getting to an open market, you're probably closest in Texas, but I've also been saying that for a few years now, and there does remain cultural conservatism that rejects the expansion of gambling, along with, I think, opposition from the neighboring interests in Oklahoma to the door opening for any kind of expansion. So that also is a tough but surmountable hill. California, I feel like you and I could be seeing here in 2030 and be a little older, a little grayer, and still having exactly the same conversation about California. I don't know that there's a lot of motivation for tribal stakeholders to embrace online sports betting in a way that everyone's going to be comfortable with, and in a way that's going to work for the variety of parties that you need to satisfy to get something done there. So look, the thing I like to point out is there are a couple of Californias in the US. There's the actual California, and then there's the combination of like a Georgia and a Wisconsin, right? That you can make from the map that doesn't have OSB a couple of different substantial opportunities that have yet to be unlocked for online sports betting. So while we do put a lot of our focus there, maybe that's not necessarily where the focus needs to go. The thing I talked about the last Nickel G's conference as well, and the thing you'll hear me pound the table about a lot, or have heard in 24 and will hear in 25, is maybe the thing we ought to be thinking about more as an industry is incremental expansion on both the OSB and the online casino fronts. Because it's clear at this point that the states that are left for OSB are left for a reason, and that getting online casino across the finish line, we've been stopped for no yardage at almost every attempt
Right.
over the last 6-7 years. Maybe we should be looking a bit more about how we can work within what's already legal, what's already authorized, whether that's something like fantasy sports and sort of building from what's available with fantasy sports toward a more robust product. Maybe that's skill-based, which FanDuel operates face-off in, I forget how many states, no license, no regulation required. What are the product iterations that could be built from that model that might get us a little bit closer? And social sweepstakes or social casino, the traditional format, I would put in there as well. It feels to me like incremental steps. That's the strategy. I think we've been trying to sprint, skipping the crawl and the walk steps of the process. So thinking a little bit more about what do we already offer as operators that didn't require legislative authorization in many or most states. So again, that's things like fantasy sports, lottery courier, skill-based, social sweepstakes. What can we do to codify, to formalize, and to expand there, and to get people a little more comfortable through incremental steps with this idea of an expansion of OSB or an expansion of online casino? Because trying to get them to go from 0 to 60 just is not working. And I think it's time for us as an industry to take a hard look in the mirror and admit that.
Do you see a state, Chris, going the other way, backtracking and saying and pulling regulated gambling out of its market?
I'd be surprised. You may see a bill floated, right? You may see someone take it up as a cause. But the reality is these are meaningful tax revenue generators for most states. So I think the more likely way you see that dissatisfaction expressed is how we're already seeing it expressed. And that's increases in tax like you've seen in Illinois and you've seen proposed in a couple of states. And to be fair, I think you're seeing one going the other way in Ohio about cutting the tax rate down to its original 10 from 20. And then I think a lot of states, maybe led by Massachusetts and the work that the MGCB is doing there, will also look at more prohibitive measures in terms of what kind of interactions can you have with customers, how can you advertise, how can you bonus and incentivize. So if there are more punitive approaches in state legislatures, I think they'll be largely focused around how much tax are you paying and how can you present the product to consumers. I'd be surprised if you saw any just complete walk back of online sports betting or online casino authorization.
Yeah, when we have conversations like this, it just reminds me of how Ontario welcoming both online casino and online sports betting was so important to those operators when this market launched in April 2022, and we see how difficult it's been in other states, especially. It seems like New York. It's a story every couple of months. The attempts there to get sorry, is it New York or New Jersey attempts to get iGaming legalized?
New York,
New York. Pushing the peanut up the hill, right?
Yeah, look, New York is an interesting one. Jason Robbins, Amy Howe, all those folks absolutely need to keep attempting shots on goal in New York. Absolutely. It's their fiduciary responsibility. They should be applauded for doing so. And the reality is politics is a funny thing. If you're in the air come budget season, a lot can happen in Albany, right? It is chaotic. So you're saying there's a chance, I think, is the appropriate meme for New York. It's absolutely appropriate for folks to keep it in the conversation, to devote resources to it. That's the peanut. The hill that you described are the New York City, the downstate casinos, and the billions of dollars that are going to be invested in those casinos, the lengthening, the consistent lengthening of that timeline, and the negative notes you're hearing sounded publicly by folks like Wynn and LVS about their perception of the intersection between land-based casinos and online casinos. It would be, as long as those downstate retail casinos are a priority and are carrying with them the license fee that they're carrying, the amount of investment, the kinds of high-end luxury development, and the sorts of jobs that's going to generate, not just on the employment side when the casino's open, but the construction side for years and years. I have a very difficult time seeing that take a back seat to online casino, and the folks who are involved in advocating for retail casinos in New York City have made it pretty clear publicly and privately that they're not going to be comfortable making those levels of investment if they have the uncertainty of having to compete with online casinos. So that's the hill, but you should still don't lose the peanut. Peanut's important, and you should keep making those efforts. I think we all just need to be realistic about the difference between possible and plausible in New York.
I should have ripped off the shots on goal analogy, Chris, and referred to pushing the puck down the ice. So, but I think that's a good place to leave it. Chris Grove is a co-founding partner of Acies Investments, partner emeritus at Eilers Krejcik Gaming, and one of the most knowledgeable people I know on the the gambling industry at large in North America, across the rest of the world. Chris, really sorry we didn't get a chance to see each other in person this year, but great to catch up with you virtually. Always appreciate your time and your wisdom, and wishing you and your family just a wonderful holiday season. And it's on my wish list for 2025 for you and I to see each other and to get together at some conference.
Yeah, I'm sure we will, and hopefully, thank you for mentioning the holiday season. Hopefully, I won't catch too much flack for breaking out the holiday sweaters for a podcast appearance as opposed to the more traditional blazer. But we only get winter here in Las Vegas for a couple of months, so you've got to maximize your sweater usage while you can.
And Chris, it's so appropriate today because as I look outside my window right now, it's starting to snow. We're supposed to get 40 to 80 centimeters of snow over the next 36 hours, and so you you wearing what you're wearing is very, very appropriate. But always grateful for your time, and we look forward to seeing you again soon.
All right. Thanks, Steve. We'll talk soon.
Great. That's it for this episode of the Gaming News Canada show presented by GBG Plc. You can find us on Substack, also at gamingnewscanada.ca, and on the various podcast platforms. And again, thanks so much to Chris Grove for joining us today, and we will see everybody again very soon.
Thank you for listening to the Gaming News Canada show. Sign up for our newsletter at gamingnewscanada.ca. Follow Steve McAllister on LinkedIn. Message Steve if you're interested in being a sponsor or featured guest.